Nadeem, Uwe Jacobs, property strategist from Property Friends. I trust everybody is well. Well, it's our last day in Hobart, and apologies for Saturday. We went and checked out some outlying areas, and there was no phone reception. So, as it sometimes happens, life doesn't always go as planned. All right, last day in Hobart. We're having great fun. The median price, I'll give you a quick summary of where we're at and what's happening here. The median price, according to the Hobart Mercury, which is the local paper, for house and land, the median has dropped by $40,000. Now, let's put that in context. The last 3 years, it went up over 50%. So $40,000 is, from a median point of view, about 6-7%. Who gives the Continentals what I say? The good part about that is that the heat is coming out of the market, no question. Case in point, one of the big developers here has sold at the peak, couldn't get their development up and going towards titles fast enough. The titles for the first blocks of about 250 are going to come through only in February 22. Now, meanwhile, we've had by then, I would say, 5 to 6 interest rate rises, and people are hurting. Not only that, but the banks have tightened up the lending criteria substantially. So blocks are falling over on finance, 2 per week. Now, the amazing point to me is, whilst they're starting to feel the pain, they can't see it yet. They're still asking for $330 to $350 for land that I can buy as a resale in the established market for $300 in a better position, and I know what I'm getting in regards to views. See, that's one of the hardest things to be doing, and that is, what is the aspect that I'm going to have when I'm standing on a block of land in a new development, and I have to imagine who is going to build where, what's the aspect that I'm going to end up with. Because the most stunning views can be built out very, very quickly. We've all seen that many, many times. So, yeah, it's interesting to me. But as always, when you're on location, you find the golden nuggets. As I said, I found a gorgeous block, a sale in the established market. So it's an empty block of land, a Battle Axe block with great views to Pittwater on the right side of Pittwater. So again, this is where the local knowledge comes into effect. When you're on the northern side of Pittwater, which is a big inlet, you don't get any sun till about 3 o'clock in the afternoon. Now, in Hobart, sun is pretty darn important because it gets freaking cold over here. So it is really important to have the right orientation. Now, that block, it has got the right orientation. It's got a northern aspect. So you get, from daybreak, you get sunshine. It is out of the prevailing wind as well. So for 300,000 for 670 square meters, something like that, that's a great buy. But I'll tell you what's even a better buy. We drove around, and I always contact the people that I deal with, including agents and so on and so forth, people that I've established relationships with. So I ring up a person that I spoke last with 3 years ago when a fairly substantial development was going in Austin's Ferry, which is about 20 minutes from GPO Hobart North. And blowing me down, he tells me that there's 6 lots that have just come on the market that was residual stock from the developer. Well, these blocks are river frontage. So you can bet your sweet Pippi within 15 minutes I was there. And it looks like we're going to snuffle one up. The pricing is, of course, high, and I'm not going to disclose any figures here now, but where can you buy river frontage? That sort of location can never, ever, ever be replaced. So I think we're going to buy a block of land that is very, very unique and that will have extremely good capital gains, although we are buying in the top end of the market, simply because it is so scarce to get river frontage land. And we have a very clever design that will fit on the block, and it will be a fantastic development, whoever will snuffle that up. Now, so the moral of the story to me is the internet is good. You can do all sorts of offsite research, but nothing replaces on-site, being there, feeling it, smelling it, dealing with the people, getting the gist of what's going on, and working exactly out what is the orientation of the block, what's the prevailing wind, is there any issues with flooding, are there any other issues, is one side of the street the motorcycle gang, on the other end of the street is $1 million homes. We've all seen that, but no agent, no internet will tell you that. So strong recommendation, either go to site or have somebody that you really, really trust look after your interests. Anyways, let's get to the RBA, and I want to make it short. As I had predicted, and you can look up the Facebook post, 0.25% increase today. So that means that the average mortgage holder is up $800 a month by December. And we are forecasting, well, I'm saying another 0.25%. There's not going to be a board meeting in January unless some world crumbles. And February, well, remains to be seen where we're at then with the CPI, with the increases and so on and so forth. But $800 a month is a real chunk of money. So there's going to be some pain out there for people that, as we say, translated from German, leaned out of the window too much, at the people that geared to the end, which is not smart. Anybody that thought that interest rates are going to stay at 2 or 3% is in la la land. 6 to 7% is the average, and that's what we need to calculate on. So I fear for some people that went for $600,000-$700,000 mortgages just to get the McMansion or to allow for the 2 or 3 big screen TVs as well, and all this sort of stuff. Anyway, Ulla and I myself have gone through an 18% low start loan back in, was it 89, 90, something like that. It's funny how it works, but it works. You make it work. The mortgage gets paid. And I don't believe that the banks will foreclose on owner-occupiers. Investors may have a bit more of a hard time, but I have seen hardly any foreclosures there as well. So, summary, we always make it work. The mortgage gets paid. So, and last but not least, the best time to invest into property is 10 years ago. The second best time is today. It's time in the market, not timing the market. All right, that's it. We are flying home tomorrow morning, early flight. 6:30, we're getting off. Yeah, have a good one. I trust the right horse won if you have bet on the Melbourne Cup. And remember, you got to be in it to win it. Have a good one. Bye-bye.